that's kind of the fascinating thing about trading, is that we can all be looking at, quote, the same pattern. We're all trading the same system, and yet we're not really, because we see things totally differently. It's just kind of fascinating to me.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
Welcome to Two Traders. It's Walter Peters here, and I've got Darren on the line. Hello, Darren.
Good morning, Walter.
Yeah, so we're thinking, Darren, we're talking about this idea, and I'd love to get your thoughts because I think we're going to have different approaches on this, which is always interesting. But what do you think about this idea that there are these patterns in the markets that are repeatable, that you see them over and over again, versus the idea, of course, that like there's just, looking at the patterns in the market is like watching the cockroaches walk up and down the wall. It's just totally random. They both kind of have their supporters. So my thought is, like, when someone says to you, this is a repeatable pattern, I see this happening all the time, what are your thoughts?
Well, my initial thoughts, that's what we're built to see. So you are going to see patterns. And, I would say if you're going to trade off patterns like that, I think that's fine. But you need to understand how much of an impact it's going to have on your trading results, and the fact that that's just part of a bigger equation, if you like, that you need to work on. And you're not going to find a pattern in its own that's going to make you a successful trader. It's quite difficult to talk about things like patterns with trading. I mean, first you have to just do 5 minutes research on the internet about humans and patterns. There's a few biases that relate to us and seeing patterns. For instance, there's the one where you see faces in things, where people have seen apophenia.
Yeah, apophenia.
Yeah. And we have a few biases like that. And, when you look at the research into it and why that exists, then it makes completely, it makes sense. It's logical that we would see patterns. And whenever there's like a deep-rooted bias and then you believe you've found a pattern in something like a Forex chart, it's quite difficult to convince yourself that your pattern's not valid. But you just kind of need to join the dots up here, don't you? You need to say, well, let's have a look at the evidence here. Is there evidence that I might just be imagining this pattern, or I might be making more out of it than it actually is? And I think there's a lot of evidence to support that. So you kind of have to be logical and step back a little bit and say, okay, this is a pattern I think exists. There is a possibility that that's just being created by random up and down movements. There is a possibility that I'm kind of visualizing it because it's what I want to see. If you still then to decide to trade based on that, then I think at least you're going into it with an open mind. Because I think most of these patterns don't really exist. And for me personally, if I'm going to trade a pattern, it's a much broader concept of a pattern rather than a very sort of precise, this goes below the 68 fib retracement and then it prints this color bar at this time on this. When you start getting that deep into it, then I think you're over-egging it a bit.
Right, but what if that's not? I see what you're saying, but what if someone has a pattern and they've got it really detailed, like it's got to be this 33% and whatever and blah blah blah, but that might just also work as a method of restricting them to taking certain trades. It's like a rule basically. It's a system rule. So, you know what I mean? Like that, it could be helpful in that way, right?
Yeah, definitely. And I think that, then there's some logic behind it, It's saying, this is a pattern that occurs. Presumably they've gone on to test that they can use it as a tool for trading, and its main purpose is it stops me from over trading, such as a pattern of waiting for a deep retrace after a strong momentum move. That makes sense to me. I think the problem is though is a lot of people say, I find the pattern that's always going to win, and I think they see patterns like that, like they somehow like solve the problem, and then other elements of the trading tends to be pushed to the background and not given the importance it requires.
Right. So reading between the lines here, listening between the lines, basically like you might say, okay, you see this pattern and I understand that, and it looks like this is something that you want to trade, but you're really focusing on the wrong thing. Really what you should be talking about or really concentrating on is your reward to risk ratio, or how you manage your exit, and it's not really about the pattern that gets you into the trade. Yeah.
And I think like you were suggesting, patterns, if we're talking about particular candlestick patterns and the such on charts, they're better used for, like you say, giving you some sort of order and some sort of guidelines to trade around, and not really the elements that are going to make you profitable.
Yeah, right. Yeah.
Some people will disagree with that though, but for me, it's always, whenever something like this comes up, I always look at the psychology first and see if there's a compelling case that we might be making a judgment mistake on this. I always look for that, and if there's really strong evidence that could be happening, then you have to be much more open-minded about what you've discovered.
Yeah, absolutely. Yeah. I mean, I find patterns very useful for me, and I'll test them. And I've tested other patterns that I don't like. Like, for example, one of the ones that I've seen or I came across, I think it was 2003, 2004, was this. It's called the Three Soldiers. So anyone who's familiar with candlestick patterns has probably heard of the Three Soldiers. And I found it to be completely unreliable. In fact, I contemplated a trading system based on fading the Three Soldiers. It was that unreliable. But whereas other patterns I've seen, such as the Big Shadow or Kangaroo Tails or whatever, I found to be quite reliable. Now, I'm open to the idea, okay, that perhaps, because I understand, apophenia, I understand you give people random numbers and they can find the patterns inside there. I'm open to the idea that maybe there isn't anything going on there. But what I don't understand is how is it that I can go and test the Three Soldiers pattern over 12 years, let's say, and take 700 trades, and it completely stinks. And then I use the Kangaroo Tail I test that over 12 years, and it works. Like, and even if I'm using the same exit strategy on both patterns, to me, there has to be some sort of edge there. There's got to be something going on. And I know, and I realize that I'm open to the idea that perhaps I'm seeing something that's not there. But at the same time, then, why is it so? Why do I see these disparaging statistics? I mean, the one theory would be that the reason why your Kangaroo Tail seems to work or your Big Shadow seems to work is because you just happen to live or test in a period where it is working, and then later on it will stop working, right? Is that one thing that you would maybe point to? Or
yeah, well, I mean, it could be just blind luck. It could be just randomness, and you have to be kind of open to that. And that's why you have things. That's why you do back testing, and you make sure you trade the right size, and you make the best of your winners. You have like some sort of exit strategy that's got a positive expectancy. That is one possibility. It is a possibility, like you say, that there is a true edge in that. And I think if I looked at Big Shadows, it's Big Shadows, isn't it? And found a positive expectancy, I'd say, well, what is actually going on here? And, essentially, I'm presuming prices, say, rising fairly strongly, and then it peaks and reverses very strongly. And, that is a good indication to sell, because there's, clear evidence on the chart that the bias is changing, and momentum's increasing with that bias change. But then you have to say to yourself, well, that's not the only candle pattern that represents that. So, you'd have to test the big shadow against, a similar price movement that is a different pattern.
Yeah. Yeah, absolutely. Yeah.
I mean, you could argue that people are looking for that particular pattern.
Right.
I mean, if that was true, that the majority of people are watching the instruments you trade on the time frames that you trade in the period at the time in the time slots that you trade, and they're waiting for that, then it would have a really high success rate, wouldn't it? Because the majority of people would be trading that signal.
Yes, but here's where I think it gets so interesting. I agree with that premise, but here's where I think it gets really interesting. I get emails from traders around the world, and they say, and they'll say like, "Hey, look at the euro yen right now," and they'll send me a screenshot or whatever, right? And I'm sure you've seen the same thing. And it's like, there's no way I would take that trade. Like I can kind of see what they're talking about, right? But it's completely different to what I would like. When I look at a chart, it has to either hit me straight away and I go, "Yep, that's a trade," or I just walk away. Like it's got to be obvious.
So you're basically taking in information that isn't really just a pattern.
Probably, yeah. I would have to say probably, but the fascinating thing is that I can give you the big shadow pattern. I can give it out to 25 different traders, and we can all come back a month later and compare our trades. And there's going to be some overlap, but it's fascinating to me to see the difference and how people supposedly trading the same strategy, the same discretionary rules, are taking completely different trades. And that's, I think, where, do you know what I mean? Like, I think that's kind of what makes the market.
Yeah, I think there is a broader concept going on, isn't there? That rather than just the pattern, and maybe that's what makes the difference between traders.
Yeah, and the first time I had really kind of found this was in, and I'll put this in the show notes for people interested. There's a book by a guy named Darryl Guppy, and Darryl Guppy's an Australian trader. And I think I read this in 2003 in one of his books. I find his books kind of hard to go through, and I haven't read one in years, and I'm sure he has some more. I think he's in Singapore now, But the interesting thing was he said, in the book, he actually demonstrated how, here's a strategy, okay, and then you give this to some people, and then it's like they all take totally different trades, even though, officially we're all trading the same strategy, but it ends up with totally different results because everyone kind of sees it a little bit different. And that's kind of the fascinating thing about trading, is that we can all be looking at, quote, the same pattern. We're all trading the same system, and yet we're not really, because we see things totally differently. It's just kind of fascinating to me.
Yeah, and again, it comes back to, well, I don't know. I mean, can you put that down? Can you put that down to psychology? Because how much are you being affected by what happened this morning before that big shadow, and what happened when you were trading yesterday before that big shadow, and all of these things we don't think are being used in our decision process. We think we're being completely rational all the time, but science has pretty much disproved that now. We're the amount of rationality is probably the smallest percentage. The rest is a lot of it's coming from the subconscious.
Absolutely, yeah, absolutely. And that would probably make an episode in itself, talking about that. That would be great to talk about that. Maybe we can talk about that next time. Yeah. So there's a lot going on in there that we're not aware of, and I think that sparks an idea or a thought in me when you say that, Darren. Is this idea of what's going on in our head and how maybe our experiences perhaps play into that? Like we see things slightly differently. So, for example, a good example of that is the sad example of someone who's been physically abused as a child. They will see other people and interpret what's essentially a neutral expression or a neutral, interaction with somebody as the other person's being aggressive. So they see aggression everywhere because they've been attuned to that, right? And so to me, that's, same thing with the woman who keeps choosing the husband or the boyfriend who is abusive, right? You tell her, you got to leave this guy, you got to find someone better, and then she leaves him, and then she comes back with the exact same guy. It's a different guy, but it's the same situation over and over again. And to me, that's kind of the psychology of the markets that is exposed when you're looking at patterns. If there are patterns that offer an edge, really, to me, the reason why they're there is because we humans are the ones that are making them appear over and over again. The vacillation between fear and greed. And we see these things pop up over and over again, not because everyone's trading the same system, but maybe because, we're all kind of predictable in a certain kind of way. You can kind of, you know what I mean? Like, you kind of know what someone's going to do in a given situation. So, for example, if somebody's in a trade for, maybe you know someone and they've been in a trade for 2 days and the trade's been going against them the whole time, what are they thinking? A lot of times they're thinking, if that trade can just get back to break even, then I'll dump it, right? Well, guess what? I mean, if you took that trade at a support or resistance level, my theory is that's why the support and resistance level is there, because everyone's ready to be, get out at break even or whatever, you know what I mean? See, it's everyone's kind of thinking the same thing, and that's where it pops up. And so to me, I find it fascinating that, as humans, all these people taking these trades for all different reasons, and yet it seems to me there are some glimpses of what we're thinking as a group. And these are the patterns. And I understand it could be wrong. It could be apophenia. It could be something else. But if the lady keeps going for the wrong husband that's going to abuse her, even though she knows she shouldn't do that, and the kid who's been physically beat up keeps seeing aggression everywhere he goes, then why isn't it that also traders keep seeing the same thing? In the markets, and keep doing the same thing around support and resistance or whatever. So to me, that's where it kind of makes sense. And maybe I'm just trying to construct a case to help myself believe it. But when you can test it, when you can see it over historical data, and then you kind of piece it together. Well, why would it be this way? Well, that's one. To me, that's one theory. One theory would be that, a lot of people kind of, just like we make the same mistakes in life with our behaviors, we kind of do the same things in the market. So I don't know. I mean, it's a fascinating topic. I don't know. And I guess the other thing that really you're highlighting to me is that it's not everything. And when we first get into trading, we think that the pattern or the entry is everything. But it really isn't, is it? I mean, that's just one little tiny small piece of what it takes to pull profit out.
Yeah, and that is, I often kind of beat up on people about, obsessing about the entry, and, I probably don't get my point across clearly, and like you say, there are reasons for these patterns, but just relying on finding a pattern to become a successful trader is kind of throwing a lot of really useful tools that we can utilize and are probably easier to be consistent with. Psychologically, they're easier to use, I think. And all I'm trying to do is highlight to people that there's perhaps other methods that you can use that are easier to get good at than just like perfecting the entry.
Yeah, exactly. I mean, it's like the focus is on the wrong thing. I think that if you look at most trading books or most trading courses or what most people talk about on the trading websites around, any forum, anything you pick up. If I go into the bookstore, right? There's a bookstore in Sydney that has a lot of trading books. And if I go in there and I just randomly pull one with my eyes closed off the shelf, it's a 9 out of 10 chance that trading book is going to talk about trading systems. It's going to be about trading systems, how to trade this way and that way and why this way is the best. But you know what? The longer you trade, and maybe I'm wrong here, Darren, you let me know, but the longer you trade, it seems like the more emphasis you put on understanding you and not really the system. You can understand a system in a weekend. Like you can figure out its weaknesses and all that. That's easy, right? The difficult part is how do you follow it? How do you make sure that you follow it? I mean, there are so many times that I've run into traders is they just throw their hands up and they quit because it's a tough market for their strategy, or they're risking too much and they can't sleep at night, or their account's too deep a drawdown, or whatever. To me, it's like we've got it wrong. It's our own fault, really, that we want to have dessert. You know what I mean? We don't want to have our vegetables, do we? Like, we don't want to work on the psychology of trading. We just want to eat that really nice chocolate ice cream or whatever, the creme brulee or whatever of the pattern, or the magic moving average or whatever. Like, it's amazing to me that people pay for. Like, did you know that there are moving averages that people pay for? Like, I'm talking about like private funds. Private funds will pay to use moving averages that have secret formulas that create the moving average. Like, to me, that's crazy, right? That's insane, but it's true,
Yeah, I'm surprised funds are still kind of making those mistakes.
That's all the time we have for part 1. In part 2, you're going to learn about the hedge fund indicator man, why trading systems make you uncomfortable and what you need to do about this, the surprising result of a 10-year study testing big profit targets, why automated trading and discretionary trading systems both have the same problem, and the need for understanding your uncle point, as well as the secret of old traders, what they all have in common. All this and more in part 2. We'll see you next time.